What's going on, everyone? How's it going? Charlie here. Good morning. We have a filing to talk about out of the NASDAQ. This is SR NASDAQ 2021-088. Let's take a look. So this was filed on the 12th of November, and it is scheduled to be published in the Fed Register on 11/18, which is tomorrow. And it is a notice of filing and immediate effectiveness of proposed rule change to amend Equity 7, Section 118 of the fee schedule. So every time you see a filing based around fee schedules, almost 100% of the time what that's going to mean is liquidity, price discovery, market share, competition, most often. Now, basically the purpose of the proposed rule change is to amend the exchange's schedule of credits at Equity 7, Section 118A. Specifically, the exchange proposes to amend the criteria for two existing credits of 0.0029 per share executed with respect to its schedule of credits for displayed quotes and orders, other than supplemental orders for designated retail orders, that provide liquidity in tapes A, B, and C. The exchange proposes to amend two existing credits in tapes A, B, and C of the 0.0029 per share executed. One of the existing credits applies to members with shares of liquidity provided in all securities through one or more of its NASDAQ Market Center MPIDs that represent more than 0.675% of consolidated volume during the month. The other credit applies to members with shares of liquidity accessed in all securities through one or more of its NASDAQ Market Center MPIDs that represent more than 0.80% of consolidated volume during the month, and with shares of liquidity provided in all securities through one or more of its NASDAQ Market Center MPIDs that represent more than 0.60% of consolidated volume. The exchange proposes to amend the credits in all three tapes by also requiring members to execute an average daily volume, or ADV, of at least 350,000 shares of midpoint extended life orders, or MELOs, during the month. The proposed amendments will increase the extent to which members engage in MELO activity on the exchange and grow the extent of activity over time. From time to time, the exchange believes it is reasonable to recalibrate the criteria for credits such as these to ensure that the credits remain appropriately challenging for participants to attain in light of changes to their levels of activity on the exchange. Now, an MELO, what that is an order type with a non-display order attribute that is priced at the midpoint between the NBBO, or the National Best Bid and Offer, and that will not be eligible to execute until a minimum period of 10 milliseconds has passed after acceptance of the order by the system. In essence, the proposed additional requirement of executing an ADV of at least 350,000 shares of MELOs during the month will encourage members that currently qualify for the credit to increase the extent to which members engage in MELO activity, thereby increasing market share, price discovery, competition, and liquidity on the exchange to draw some of that market share away from the dark pools. There you have it. Y'all have a good one.